So I'm Susan Holliday. I'm a principal insurance specialist at the IFC in Washington, D.C. IFC is the International Finance Corporation. It's the private sector arm of the World Bank. So we do investments in emerging markets, all different types of investments, and we also do some advisory work, which is kind of like consulting, also in emerging markets. In most of these countries, the insurance penetration is very low. People don't necessarily know much about insurance, or if they do, they don't trust it. So delivering insurance in different ways and even different types of insurance is really important. I think if countries just try to copy what grew up over hundreds of years in US, UK and Western Europe, that's not going to work. So it's about new distribution models, but it's also about different types of products, if I can use that word, that are going to actually meet the kind of day-to-day needs of people and businesses in those countries. We sometimes invest in companies that are moving into emerging markets, but normally they're already there. But we have some companies that we invest in that are 100 years old. I mean, there's one I visited recently. The company really, had its centenary. So in some cases, we're helping companies that have been around for a long time to modernize, to get better, to find growth opportunities, and that obviously at the moment is definitely going to involve technology. On the other hand, we also do early stage investments. So yes, we are looking for fintech, insurtech startups as well and investing in those. So we've made an investment in India in an online insurance broker, and actually they are appearing at ITC tomorrow with me, CoverFox. But in India, there's a lot going on in all sorts of technology. Then you have some other countries, and Kenya would be an example where the banking is very advanced. M-Pesa is a very advanced system, better than you have in the US. But insurtech is only just starting to get going. So there are some examples, but they're quite small, they're quite early. Then there are lots of countries in Asia as well, where you have hubs, maybe like Singapore, which is not an emerging market, but where the companies are starting to spread out into other Asian countries. So there's quite a lot going on. When we're investing, we really have a kind of double bottom line. So firstly, we would have financial goals, financial targets like a PE or a VC investor. But we also have social impact, and we have to identify upfront that whatever investment we're trying to make will deliver positive social impact, and you have to be able to define it and you have to be able to monitor it. So we couldn't do the investment unless you could set that out, and also the success of the investments is judged on the financial returns, but also on the impact that they deliver. Insurance is about protecting people, protecting families, small businesses, and the economy in general. And particularly one of the areas that obviously is very relevant to emerging markets are natural disasters. There are a lot of weather events and a lot of earthquakes and things that take place in emerging markets. And in that area, large companies are well insured, but SMEs, small, medium enterprises, and people are usually not insured at all. And it can have very bad social impacts, which then the government is left with maybe having to deal with, and they don't have the money or the expertise either. So yes, it's very important for more general economic development. In a lot of countries, even when people are supposed to buy motor insurance, they don't. And typically the way the market's been structured is it hasn't encouraged better driving. Whereas in the US, for example, if you don't have accident, your policy will be cheaper. Typically in emerging markets, it just cared about the make and model of the car and nothing about the driving record. So that there is some work to do there, and we have some investments in that space. The other areas that are very interesting to me are definitely the SMEs. There are lots and lots of small businesses, and there's actually a big informal sector. I guess we would call it self-employed people in a lot of emerging markets, but who are running a business and typically are not well served by insurance. And then definitely the natural disasters issue, and that impacts actually not only people, but also local and even federal governments, because of the costs of kind of dealing with the aftermath. So there have been examples that you may have seen in emerging markets where the government, for example, purchased an earthquake bond or something like that. Specifically in the insurtech space, the companies have to be based in or doing the vast majority of their business in emerging markets. But we see opportunities for different types of companies. So it could be a fully kind of digital insurance company. It could be an intermediary, like a broker or something that's helping make agents, for example, more efficient. It could be more like a platform or a marketplace, or it could be a company that's dealing with part of the value chain, for example, the claims process, or providing some kind of telematics solution in emerging markets. So there are actually lots of what we call verticals that we would look at. We are not geared up to do very small, very early stage investments. So insurtech is a relatively new thing. So one of the challenges is that a lot of the companies need to be a bit bigger, a bit more mature before it makes sense for us to invest in them. So now we have a good pipeline, but I suspect in a couple of years there's survival of the fittest, but that there will be some more that will meet our criteria.